Okay, today again we are going to do another question which is going to illustrate the application of the issue on transfer under MFRS 140. And in this particular question, which is question July 2024, we are going to look at the transfer, and this one is transfer from IP, where in this question IP that in our case here, subsequent measurement use fair value model, where from IP in this question, transfer from IP to owner occupied property, or also known as PPE. Yeah. And under this question, the illustration is to show what happened if the subsequent measurement of the PPE uses the revaluation model. RM stands for revaluation model. Okay, let's read the question so that we can pick up things which I have just mentioned earlier on the important things that you need to look at while you do your transfer under MFRS 140, the steps which I've just shared with you much earlier. Okay, so read the question. Primera, so before that, let us read the requirement. You are asked to advise. When you are asked to advise, you need to advise what are the accounting treatment of what? Accounting treatment here, accounting treatment on the transfer of building on 1st January 2020. So 1st January 2020 is actually the date of transfer if you read the question. So whether the transfer is from IP to PPE, it is not mentioned in the requirement. So you need to read and you will decide whether it is a transfer from IP to PPE or PPE to IP. But this one is an example of transfer from IP to PPE. So you have acquired the building, and the cost of the building that was acquired, a building. The cost of that building is 3 million. And this is on the date of purchase, 1st of January 2018. So 1st of January 2018 is the date of acquisition. 1st of January 2018. 2018. So this is the date of acquisition. And you are informed the cost of that building, the cost of the building, which is 3 million. 3 million. And that was on 1st of January. And you are informed further that the building was rented out. So when the building was being rented out to various organizations, and it earned rental income of 200,000 per annum. So that 200,000 is an income, but it was being rented out. So meaning to say that the building here is an item of IP. So building is an IP. The reason is because it was held for rental purpose. And that was starting 1st January 2018. On that date, which is on 1st of January 2018, the expected useful life is 50 years. 50 years. And then later, on 1st January, 1st January 2020. So this is the timeline that I'm drawing. And this is the 1st of January 2020, which means that this is after how many years? 1920. So after 2 years. So after 2 years, this is 2 years. This period here, 2 years. 2 years. So it was held as an IP. Now after 2 years, you are informed on 1st January 2020. So 1st January 2020 is the date of transfer. So I put here DO T. DOT is date of transfer. Date of transfer, you are informed the company's management on 1st of January 2020 had decided to use the building for operation and admin purpose. So the date is on 1st of January 2020. 1st of January 2020. 1st of January 2020 is the date of transfer. So what has been done is that they have decided to use the building. So meaning that there is a change in use. So I'm going to write here, there is a change in use, change in the purpose of using the building, right? So on this date, you should take note that the remaining useful life of the building here on this date is now no longer 50 years, but it will now be 48. Take note on that on the day of transfer. Okay, this is still 2020. So what you need to understand is that there are also some information on rental income. So rental income is here. Rental income, you should know how to record debit bank, or maybe debit, if you receive the income, debit bank, credit rental income. So rental income here is every year 200,000 per annum, PA, per annum, 200,000. So that one is going to be your income. Right. So the fair value of the building was 3.3 million on that date. So on the date of transfer, which is on the date of transfer 1st of January 2020, you have the fair value on the date of transfer, which is 1st of January 2020, it is 3.3 million. Remember I mentioned to you earlier, on the day of transfer, you need to go and determine what is the fair value. So you have determined when is the day of transfer. The reason for the transfer, the change in use here is what? Change in use here is from being rented out, which is rented out, to admin use. Rented out meaning that from becoming an IP now becomes a PE. So that is what happened starting from 1st of January 2020. That is the evidence. The change in use is what happened. The evidence is when the building was held for rental, later are now converted into admin use. So the fair value of the building is 3.3. Primera adopts the fair value model. So now number 1, determine what is the fair value. You have done that. Now go and compare that fair value on the day of transfer, which is 3.3 million, with the carrying amount. So we need to find what is the carrying amount on the date of transfer. So carrying amount on date of transfer is carrying amount on 1st of January 2020. So you have no information at all regarding what happened with this 3 million. But you should understand that when it was an IP, there was no depreciation. So therefore means the 3 million will still remain the same as at 1st of January 2020. I put there, this is the date of transfer, the one with the triangle sign. So therefore this is going to be the carrying amount. So the previous carrying amount, which is the 3 million, will be now the carrying amount on date of transfer. So the carrying amount is 3 million. So therefore, you need to go and check what is the difference. Remember the step that I mentioned? What is the difference between fair value on the day of transfer and the carrying amount on the day of transfer? So there was a difference of 0.3 million. And you can see here on the day of transfer, it is still an item of IP. So you can see that fair value exceed the carrying amount. And because this is still an IP on this date, yeah, therefore, on the day of transfer, there is a fair value gain. So fair value gain of 0.3 million. So this fair value gain will be recognized just like the fair value gain where you are going to go and debit the IP because at this time it is still an IP, and you are going to credit fair value gain with that 0.3 million. However, on the day of transfer, it is now no longer going to be an IP. It will become an item of PPE. PPE. So what is the cost of the PPE on the date of transfer? So under MFRS 140, the fair value, on the day of transfer, fair value on day of transfer, which is 3.3 million, will be the cost or the deemed cost of the PPE. Because remember, starting from 1st of January 2020, it is no longer going to be an IP, it will be PPE. So it will become a PPE building. So starting from this date onwards, 1st of January 2020, this one here, yeah, the one in blue there, the blue triangle. So you will start to have depreciation because it use revaluation model. So depreciation will start to be charged. And if there is any fair value change after the date of transfer, maybe somewhere in July 2020, maybe 31st December 2020, this is no longer fair value gain or loss. This will be treated according to revaluation model. So it will be treated according to revaluation model because the difference in the carrying value and fair value for items of PPE is under revaluation model will be treated as revaluation surplus or revaluation deficit. But here no issue. But starting from 1st of January 2020, you will have to consider depreciation. So you are asked to explain what is the accounting treatment. So let us look at the accounting treatment. Here, I'm going to share it. Are you still with me, class?
Yes, madam.
All right, good.
Yes.
Okay. Just be patient so that I can go to the right page. Okay. So number one. So these are all what we have discussed before, all this. So now, number one is I said go and find um the issue here is about transfer from IP to PPE. So remember, you have to go and find what is, wait, yeah, just to show you. You are going to go and find when is the date of transfer, number one. And then what are the reason, what are the evidence, what are the fair value on the day of transfer. We have found all this, the carrying amount on the day of transfer, and what is the treatment for the difference between 4 and 5, the difference between carrying amount and the fair value. So let's go and apply this into our answer. Okay. So on 1st January 2020, so this is what? This is we are talking about the date of transfer here. So DOT. So that is the date of transfer. Now you are telling you what happened on the day of transfer. So on the day of transfer, which is 1st of January 2020, you have to go and inform what happened. There is a transfer from investment property. So the word transfer here, from investment property to property, plant and equipment. So that was showing what costs the transfer, and here there is the evidence. The reason is because the change in use, because there is a change in use. So the change in use is an important phrase for you to take note. The word transfer, a transfer. And give the evidence. Evidence here is the one that I will color in pink. The evidence is that from rented property and now it becomes owner-occupied property. Rented property becomes owner-occupied property, and this is an admin building. So that was in the first sentence. Explain when is the date of transfer, what happened on the day of transfer, and what are the reason for the transfer, and what are the evidence. So these are the one in first paragraph. Second one is to go and explain what is the fair value, or state what is the fair value on the date of transfer. So the fair value on the date of transfer is the fair value of the property, which is 3.3 million at the date of transfer, which is on 1st of January 2020. I have mentioned earlier in the working section here, this will be the deemed cost of the PPE, deemed cost of the PPE. So therefore, you have to go and explain that in the sentence. So will be the deemed cost, shall be the deemed cost of the property measured as PPE, because from 1st January 2020, it is a PPE. Then explain the third one, just about the difference. So the difference between the fair value on the date of transfer, what was the difference here? The difference between 3.3 million, the fair value on the date of transfer, and the previous carrying amount. The previous carrying amount is the amount that you have compared earlier, which is the previous carrying amount. Here refers to the cost of the IP, since IP was not depreciated, since it uses fair value model. So the carrying amount of 300,000, the previous carrying amount of 300,000, which compare 3 million and 3.3 million. This one, these two, the difference is 0.3, that needs to be explained. Right? Is recognized in the as fair value, gain on fair value change in the SOPR. So you recognize as a gain on fair value change. And from here onwards, which refers to 1st January 2020, the building here refers to what building here? It is the building here refers to the PPE. Building will be depreciated over its remaining useful life of 48 years. Okay, remaining useful life of 48 years. So that was, you can screenshot this to help you later. You can do your screenshot yourself, right? You can screenshot. Okay. That was the item that you need to record. So let's look at what is the journal entry, because this is without the journal entry. So number one, you need to record what happened on the day of transfer. Number one is to record the difference. Journal entry to record the difference between the carrying value and fair value on the date of transfer. So this is where you put this on 1st of January 2020, debit IP credit fair value gain in your SOPR. How much? The 300,000 in case you are asked to do journal entry. And then again on the same date, if you can still recall, the transfer date is 1st January. So let me just show you some account for IP. So this is when the building was an IP. So on 1st of January, 2020, you have a balance. The balance brought down. And the balance brought down here was 3 million, right? 3 million. And because of this transaction on fair value gain, on the date of transfer, you have this to be shown in the as fair value gain. So fair value gain. This is on the day of transfer, 1st of January 2020. And the amount is 300,000, right? 300,000. And therefore, on 1st of January 2020, you will see no more building as an IP because it will now be reclassified. When it was transferred, you reclassified. So therefore, you need to record another transaction, which is on 1st of January 2020, which is to reclassification of IP to PPE. So meaning that now you will go and debit the building as an IP, as a PPE, sorry, and you will credit the building. Previously it was an IP. How much? At the fair value. So at the fair value means fair value given earlier was 3.3. So the total here you can see it is 3.3. So all this will be closed off. This will be gone to the or transferred to building as PPE. How much? 3.3 million. 3.3. And there is no more balance in the IP. So the figure here would be at fair value 3.3. 3.3. So there are two transactions here. Now, one is the difference between carrying value and fair value because this is a gain. So I just record the gain. Second one is the reclassification. With this, you have a new item, building as an item of PPE, which happens on the date of transfer, 1st of January 2020. Remember, this is the date of transfer. And on this date, you have IP building, and that was at the fair value of 3.3. And on 31st of December 2020, if you close the account, your balance of your PPE will be 3.3 million. 3.3 million. So meaning that that is the amount that you start to consider to depreciate by the first year. 3.3. Okay, so therefore, on 31st of January 21, you have a balance brought down of 3.3 million. Okay, that was the entry, journal and the ledger. So therefore, you can see that also give impact to your extract of SOPL for the year ended 31st of December 2020. Number one is on expenses. You will have to go and calculate depreciation. Your depreciation would be 3.3 million divided by remaining useful life 48 years. Go and calculate and find how much is the amount here. Then the second one is the item other income. Your other income would be first the rental income if you provide rental income. But in our case here, there is no more rental income because rental income is relevant before the date of transfer, meaning that 2018, 2019. 2020, there is you have to check if there is any other income, so none. But if you do things for 31st December, or maybe on 1st of January 2020, then you can see the other income. So in this case, there is no other income. There was just the depreciation. The fair value gain is on the item here. So I put here fair value gain. So there is no other income in the form of rental income since you stop renting the building. You use the building now. Fair value gain on changes of IP. So the fair value gain was 300,000. This one for you to calculate. Right. And that was the entry here. Okay, that was for this particular question, which is transfer from IP to PPE with the journal entries, with the extract of SOPL, and also with the explanation of accounting treatment. Okay, I'm going to stop this video.